So now let's start now. Okay. So I'm not going to waste much of our time. So today we're going to talk about how to use some of these indicators, some some of these popular indicators. Okay. So I'm going to show us how to use them. And one thing I want to let you know is that indicators is not something that you should depend on. So what you can do about the market, how to analyze the market, even without using indicator by improving more than using indicator is what you should need to focus on. But I just want to show us how you can also implement indicators. Okay, so if you find it difficult to trade, if you find it difficult to trade like that, maybe you can trade without using indicators. You find it difficult that way. That means you might still go back to using indicators. But if you know how to use indicators, indicator will really help you. I saw someone posted on the group. He said candlestick psychology is very hard, that he can't cope with it. So he's going back to his indicator and now he's making it indicator. So I can't believe him. I cannot say anything about that because one thing about trading is you have to stick to what you are good at. If you are good in using indicators, stick to it. Don't ever adapt to any other strategy apart from that. But if you are not good in indicators, maybe you are good in candlestick psychology, technical analysis, or fundamental analysis, stick to it. You have to stay with it and be used to it. So if it can help you to improve more in your trading career, no problem about that. Okay. So um, when we talk about indicators, they always show us one thing about the market, the price movement. They sometimes give us signal when we should enter the trade and when we should not enter the trade. That means if your indicators doesn't give you a signal to enter the trade, you should not enter the trade at that time. Maybe you have a setup that always work for you, and with this setup, your indicator is not showing you when you should enter the trade. That means you should not enter the trade. Okay. So right now I'm going to show us some of these indicators. Okay. Also, you should always know how to use indicator with both um, technical analysis. So I will start with Bollinger Bands. Bollinger Bands. So you can see how to use the Bollinger Band here. When the assets, if the candlestick cross the bottom line, the price might go up soon. Or if the candlestick intercept the top line, the price might fall down soon. So this is how you use the Bollinger Bands. Then you can go up and set any of your and make the period and deviations, set it to anyone you like. For me, most of the time I don't like changing the settings if I'm using any of these indicators. I like to use the default indicators, default settings. So the upper line, if I want to let me say the upper line should be red, okay, still red. Then the middle line should be purple, and the lower line should be green. Okay. So if you want to make any changes here, you can do that. But for me, I don't like making any changes. So then I click on apply. So one thing about this indicator is that if you really want to use or you want to be good in using this kind of indicators, you shouldn't depend on it because it's not something that can give you sure signal every time. When the price is about to cross the upper Bollinger Band, upper line, what happened? The market reverse. When price is about to cross the lower line, the market also reverse. Then the middle line is just like this Bollinger Band also has the support and resistance as well. That when we have this as your support, you have all this as your support, you have all this as your resistance, then you have all this as the middle line, you have it as a supply and demand zone. You have it as supply and demand zone. Now you see that from the lower Bollinger Band, from the lower line, there's a rejection from buyers, a huge rejection. But if you look at the old trend, the trend is down, right? So the market is leaping below this middle Bollinger Bands. The market is leaping below the middle Bollinger Bands, and now is trying to is the market is moving below the Bollinger Band and getting some support at the lower Bollinger Band. So that is a sign the market is moving in a direction, something like this, in a single phase direction, something like this, like a channel, just like a channel. Okay, the market is moving like this, a channel. You will see that from here, it bounced back, up, down, up, down, up, down, up, down, up. So what you expect now is if the price will be able to get rejection from this middle or the Bollinger Band, then you should enter the trade. See, you can see some rejection from sellers. Okay, rejection from sellers, but not at the middle Bollinger Band. The market might still reverse. So let it be shock and pressure. You see, got rejection from the middle Bollinger Band. I did expect the market to close below the middle Bollinger Band. That is why I go with sellers. But see the entry point. That means the candle is not stable at the time I enter the trade. Okay, this was a losing trade. Now, what do you notice? You see the market has now crossed the middle Bollinger Band, both the trend line as well. You see the market is trying to go up to the upper Bollinger Band. Now, what you do now in this case, look at this, is facing down. This one also is facing down, but this one is facing up. So it's a sign the lower Bollinger Band, the lower Bollinger Band is facing up. This one is facing down. This one is facing down. One against two. So definitely from where the buyer started is where you should follow. If you see the three lines, let's say this is the first line, second line, and third line. If the first line, if the first line is facing down, the second line is facing down, and the third line shows something like this. That means this is the second, this is the third line you should follow. You should follow the third line. That is one against two. If the upper line is showing something like this, down, then the middle line is showing up, the lower line is showing up, that means you should follow this. This is one of the strategy I developed that time when I was using indicators, most especially with Bollinger Band. I saw this thing always occur during using Bollinger Band. You see that means you have to sharpen your eye. This lower line is facing up. This one is like neutral, and this one is like down. This one is down. But let's see. Up, neutral. It seems the three lines are not okay. This one up, then this one down. Definitely, I expect sellers entry. this one up, this one up, then this one down. I expect some sellers entry. So it might be the candle might close below my entry, or sellers will definitely form a red candle. So as they are across the middle polygon band, they are heading toward this upper line. It's just like when they cross the trend line, the channel pattern as well. So they are heading toward the next level. So in this case, I'm expecting the candle to close below my entry, or a bearish candle, because the lower line is showing down, the upper line is showing up, middle line also is showing up. Okay, a little bit above my entry. Okay, no problem about that. Notice OTC market, you can't trust this strategy on OTC market. Before, I don't always trade on OTC market because of the candles not being well arranged. This one is showing up, up, down. Okay, this one is like showing down, down, up. So I think next one should be bullish. Down, down, up, up, down. Next one should be bearish. Up, up, down. Next one should be bearish candle. Now, this is 1 minute trading, 1 minute candle and 1 minute expiry time. You can also use that on a lower time frame. Like the one I always like to use mostly is the 10 seconds uh, time frame, 10 seconds time frame, and 5 seconds. I will show you on 10 seconds how to use that on 10 seconds. So let's see what we got here. Candle is not all stable. So let's go to 10 seconds. I don't like trading on 1 minute using indicators. Let's go to lower time frame. Okay. On lower time frame will give us more, but this one is facing down, down, and down. Okay. It seems the market will go up more. So let me go with buyers for 3 minute expiry time. Then uh, GBP USD, down, down, down. No, at least one should be against the direction. Okay, down, down. No, okay, up. Okay, let me wait for this candle. Still showing down. Three are the same direction. The three lines. I need to see one against two. This one is like showing up. Okay, now I have seen one against two. So I think the buyers should enter. So let's check Euro USD. Okay, one against two. So I think the buyer should enter. Okay, since no sufficient fund. Why is not sufficient? Oh, the market still come back. That means the expiry time is too is too long. Either we make it 1 minute expiry time or 2 minute expiry time. This one also is trying to go back. This one is not that it's not good, but the market went up and down. It's trying to come down. So either you make it 2 minutes or 1 minute expiry time. Okay. See, I wanted to go with buyers, but say insufficient fund. Why insufficient fund? Okay. Actually, I was using this. What is all this? I was using the tournament account. I thought I'm using the demo. Okay, this one is okay. Let me make it this way. So I expect some buyers entries. Euro GBP. Up, down, down. Buyer should go up, down, down. But this one is showing up. So buyer should go up. This one again still come below our entry. This is tournament account. Tournament account. It's not real and it's not demo. It's tournament. Valentine tournament account. It's free. You can register for it. It's free. But if you are not a VIP member, there are some other tournament account that is free for all VIP member. You can also try that if you are a VIP member. Both the line are showing the same direction. So let me do it this way. Down, down, then up. So I think the buy should enter this time. Oh, you see the mistake I did? I didn't change the expiry time. This is the mistake I did. I didn't change the expiry time. Okay, no problem about that. See the mistake I did? I didn't change the expiry time. So let me go back to them. Okay. I think this is where we enter the trade. Let's see within 2 minutes, maybe the candle or the market, the price will go above our end. Okay, so let's move on. This is how to use the trend line, the um, Oliga band. But one thing I will advise you is you have to be smart enough not to depend on this kind of this indicator. Don't depend on this kind of indicator. You have to be smart enough. So don't say because it always work like this, it will always work all the time like that. Just like the way you are seeing trend lines, channel patterns. From here, channel patterns. The market was below, was ranging inside this channel pattern and finally break out. Then again, use this as a use the middle. It used the middle Boliga band as a support, as a resistance. That is why they see this downtrend. That one is for 1 minute trade. Same thing that happened here. You see the breakout, and then it used the middle Boliga band as a support. Also a support here. That's why the market went up. Yes, it's not a line. That is what I mean. Support is not one single line. Support or resistance is not one single line. It's an area of value. That is what I said. Support is not one single line. It's an area of value. Okay, you mean by drawing one single line. If you want to draw an area, that's why I say you need to be smart. Not all the time you'll be drawing two lines. You have to know how the area will look like. This is for, if I want to draw the area, this is how it's going to look like. So most of the time, you shouldn't be to bother yourself to draw two lines. You can just draw one line and start analyzing. Just what I did here. Just what I did here. I draw only single line. But if you want to draw it as an area, this is how you're going to extend it. This is how you're going to extend it. So the market still respects it. Still went down. So it's an area of value, not just one single line. An area of value. It seems the market we got rejection here, it's going to move up. I think that is why the sellers are leaping inside, or are leaping beside this lower Oliga band. So let me check other pair, other ones. Now, how to use Bodega band with RSI. This is when you combine two indicators. This one also, the market is not trending, it's moving the sideways. So the market is jumping from both the middle, upper, and lower polygon line. This is the resistance. This is support. So the market is not moving sideways, not moving properly the way it's supposed to be. So it's bouncing from the upper to the middle and the lower. Okay, the market seemed not to reach the line and then it reversed up because of this previous support. Okay, no problem. This one is facing down, down, then up. Also from the buyer's area, rejection from buyers now. I expect a bullish candle. Okay, very strong seller's entry because this is facing down. This one also is down, but this one is up. I think it should close below above my entry. So the sellers are very strong. It might close above my entry. It should close above my entry. This is resistance. This is facing down, but this is facing up. Okay, all the lines are facing down, down. Okay, up, down, down. Let us see how this candle will close. Down, down, up. So come on. I think the buyer should enter the game because I can see that it crossed the trend line, also crossed the up middle Boligan bands, and this one is showing up while the rest are showing down. Okay, this one is showing down. Now it's above the trend line and the middle Boligan band. Up, down, down. I think it should go up. Okay, a very strong gray candle. Very strong gray candle. So let's use the RSI indicator together with the Boligan band. So it help us determine when we should enter the trade. Change it to 13 overbought 75, oversold 25. Overbought, oversold. The market is leaping. If the market leap below the lower Bollinger Band, and the oversold also is showing and the RSI here is showing us oversold, you can go with buyers. What is happening now? No, this is oversold, but the Bollinger Band here is not giving us what we want. Now it's heading to the overbought, and now it's sleeping above the upper Bollinger line. So the market should be ready for a reversal. No, not yet. Not yet. It should be above, totally above this upper Bollinger Band, and the RSI also should touch this overbought area. Okay, this one is very close. I think the market should go more up. Okay, oversold and now leaping below. Okay, now the market should go up. This one not yet, not yet. Um, okay, now it has crossed the upper line. This one also must very close to the overbought area. A little bit more, a little bit more. No, up. Come on, not proper. So let's check order and let's see NZD USD. Okay, yes, and I think this one should be a perfect entry for a call. Let me just see how this candle will close. Okay, so I expect some buyers entries. Okay, I should have go with sellers, but I'm doubting. The market should a little bit at least very close, but no problem about that. So next time, if you are the one, you should go with sellers immediately. You cross it and it's very a little bit close, but I want some at least some a little gap, but no problem about that. Nothing, nothing here. This one, the buyers are very weak. No strong bullish, no strong bullish. See, this one is just my mistake. I would have go with sellers. So I want it to be very close like this. This one is very close to this oversold area. That is exactly what I want this one also to be very close to the overbought area, but the market still reverse anyway. Buyers are too weak, and it's at the oversold area, but the buyers are very weak. So this time, this will be a loss in trade, I think so. If sellers close below this lower line, and here is oversold area, I think the buyer should enter very strong. Nothing here. Now this one is approaching is approaching the overbought area and also the upper lines. Weak buyers candle. I think buyers should enter this time because now we see the rising of the overbought line. Okay, now this one is approaching the oversold area. If we cross, the confirmation that you really rely on is the Marubozu. Sorry, what I mean, the candle should at least a little bit below the line or above the line. That is the more priority, something that is the most important thing that you need to focus when you are using this kind of setup, this strategy or whatever. So don't focus on only the RSI alone, but this should be the major point. So let the candle cross it, and the RSI give you indication that it's buy or call. You can go to Meta Trader 4 to create an indicator that will always give you a signal like this. So if you can do that, you can do that for your own good. Now it's sleeping, still leaping above the lower line. No, not a perfect entry. After strong green, strong red again. Market is not stable here. There's no momentum down, momentum up. It's just moving the sideways. Okay, now this one, let's see how this candle will close. below, it's now below the lower Bodega band, and now it's the oversold area. So I think this one will be a better shot. Just to let wait for this candle to close. So I think it should be a better shot for us. If you are the one trading this kind of situation, you should blame yourself. The market is not trending, it's consolidating both up and down. It's not trending like this. See this momentum, this one also momentum, momentum. But here, both up and down, up and down. If buyers enter, seller will enter, buyers enter, seller will enter. That is what the market is doing this time. But I just think this one should be the same. Okay, now oversold area. So let's see. Uh, okay, let me see indication that buyers will enter here. That is rejection. Rejection now. Okay, so I think the buyer should enter. Okay, this one also. But it doesn't reach the lower low Bonega band. But I just see indication here, but this is not proper way to use the two indicators. Then this one also is rising. I think you should go more up. Buy just weak. rejection. Okay, so let's see this one as well. I expect some bias entry. This one is making retracement, retracement. This one is not good. This one is not proper to the sellers and buyers. It's not, it's not accurate. This one is still moving the sideways. This one is about to leap below the line. No, not proper signal. Okay, now this one is dipping below the line. Still not okay. I think we should focus on it now. This one did cross it, but still come back again. No, not proper. It might go to this middle one and still come back because it's not below the line, so we can't trust it. This strong red cross the make the give us a loss in trade here. So let's see. Let's wait and see. So I just need to see. This one is not good. Not good. Okay, I think it's approaching the level. No, no rejections. This one is still not good. Not good. Okay, I think it's approaching the upper. This one also. Once they cross it, uh, that will give us a better shot. No, we have to focus on this, not only this. Okay, this should give us a shot, better shots. The downside. Okay, this one also should give us a better shot to the upside. Let me make it 30. No, strong edge. Let me make it 3. Okay, but the RSI is not giving us indication. I shouldn't have go with buy. I said sellers are very strong, no rejection. So that was my mistake. Strong red candle. This one should be 3 minutes. If it is three candles, 3 minutes, you should have won the trade. But I go with 5 minutes. instead of 3 minutes. So that was my mistake. So if you want to practice it, use 1 minute candle and 3 minutes expiry time if you want to practice it. This one is still not good. This is a bad market. Okay. So cross the line, then should be rubbish. Marbozu. Marbozu. Should I trust you? No. I don't trust Marbozu using indicators. Why did you guys not cross the line for once? Why are you getting rejection, up and down? So I think this one should give me a better shot now. And it should be 3 minutes, I think. This one is 5 minutes. This one is 3 minutes. Let me make this one also 3 minutes. Or let me see this one. 5 minutes. Let me say 4 minutes. 4 minutes. It's very close to the overbought. It's very close to the overbought and across the upper Bonega band. So 4 minutes, which I'm expecting the market should go down. Okay, this one also, and this one. Let me check this one. This one give me. Let me see. Okay, let me see the way the candle will close. The way the candle will close will help me determine if it's going to be 4 minutes or 5 minutes, just like this. This one is strong and no rejection, so it should be 5 candles. This one is strong also. If there's no rejection, it should be 5 candles as well. That is a 5 minute expiry time, but I'm seeing rejections. Okay, let me go with 4 minutes. Okay, this one also is strong. This should be 5 minutes. 5 minute expiry time. Okay, so let's wait and see. This one is still going down, but the market is not stable. It might reach this level and still reverse up. So the market is not stable here. That's too danger. See what I said? Got rejection. It might still go back. It might see a strong green candle because we have a strong red. There might still be a strong green candle that might close above. So the market is not good in this kind of situation here. This is also a strong red. Another strong thing might still occur here. Okay, strong red, strong green. But if we manage to close above this middle one, it should go more up. So the next one we're going to use the EMA, the EMA. Okay, that will be the next indicator we're going to use, the EMA. EMA and CCI. These are the list of indicators that I always like to use. Polygon band, CCI, MACD, moving average, RSI, and S2. These are the indicators I like to use. Stochastic, moving average, MACD, CCI, RSI, and Polygon band. These are the indicators I like to use mostly. Okay, no strong bullish candle. Because they close below this middle line. Which one is that? Okay, this one. This one is like, you see, they didn't cross the middle line, so it's likely to make some retracement. Same thing that is happening here. If this one should cross it to go more down, you see, it's trying to go down now. Because buyers, this candle is very weak and they cannot cross the middle line. These are the disadvantages of using these indicators. So this middle line doesn't mean that when market touches, we reverse. This middle line works the way you are drawing support and resistance using trend line or horizontal line, something like that. So it's not when the market will touch and reverse. No. Just like this middle line, if you want to draw the support and resistance area, this is how you're going to draw it. Support and resistance area. So you will look at this market reverse here, market reverse here, market reverse, market reverse. So also the market will also reverse here. So this is a supply and demand zone. Okay, so it's not that when only the trend line, only this Marco's moving out, so Bodega bands, and not that when the candle touch the Bodega band, market will it reverse because of this area here. If there's no area, market will not just respect this Bodega band. So the Bodega band will always make me to understand. The indicator will always make me to understand, to quickly understand the zones, area, and so many other things to consider. Okay, this was a loss in trade. Okay, so let's go to the next one using the CCI, commodity channel index, same period, color, overbought, oversold, the baseline, yes, same setting here, overbought. Okay, now with this one, once the price is at the oversold, maybe cross the oversold, that is when you enter the trade. Cross oversold, that is when you should enter the trade. Above overbought, that is when you should enter the trade. That is what um, this indicator is meant for, not to just trade the way anytime they touch. No. Once they cross it, that is when you should enter the trade. So this is the oversold, this overbought, this is the baseline. So let's see if the market will cross the oversold. It's just the same way you are using RSI, but this one is totally different. The lagness is different from the RSI. So now it has crossed the oversold. I need to confirm what happened here. Buyer's entry, buyer's entry. So let me go with buyers for, okay. So for 5 minutes, 6 minutes. Okay. No, still leaping above. You see, it cross it, and then it start rising. You can see cross it, and it fell down. No, nothing here. Okay, this one has crossed it. Uh, go with bias for 5 minutes. Also, there's a level here, support zone. It cross it, and it's rising up. It crossed it, but I need a good confirmation. Okay, come on. Why the buyers are very weak? Okay, this one has crossed it. Okay, it has touched this line. So this will be 3 minutes because it crossed it as well. Weak bullish. Okay, no sellers entry yet. I can see some sellers rejections. So I think it should go down. No bullish. Buyers are very weak here. The market will not go up. This one is still consolidating. Now with your scores, you should know that this ECI is not reliable than the Bodega band and the RSI that we just did. CCI also needs some combination, but the combination is too complicated. You have to use like three indicators before you can be able to. CCI must be a perfect way when you are using the trend line, also with the horizontal line as well, just like this. So CCI will be okay. Let me see that if bias will enter for 5 minutes. I see so many supports here. Big bias entry support. I think now is below the oversold. I expect the bias entry. This one is still consolidating. This one is making a retracement, a pullback. The pullback candle is not strong enough. This one also the gap up down. This one is strong. Expect some sellers, but only one sellers. I expect some buyers, but only one buyers. So I think buyers should enter now. One sellers green, then doji, then buyers. This one is not good. Okay, this one is going up. It crossed the oversold. So one thing I will say in this one is that the market most of the time are not in a good condition that you should use this strategy. Like all this weak spike, rejection, up and down, it will make the market not to move strongly. Like what I did here, I expect downtrend, but the market is having up and down, up and down. This rejection. Same thing here, I expect some bias entry, but it's still having all these middle levels. They make the market to reverse. So that is why I don't like using the CCI indicator during the time I was using indicators on this time now. So there's a breakout, then weak sellers and weak buyers at the resistance. There's a breakout, then buyers think the market should go up because there's the breakout here. So I expect some buyers entry. Resistance, the market still not reverse. Only one weak sellers, something like that. Now there's little below the oversold. Let me make it rejection, rejection, rejection only. So let me go with buyers here. No, nothing yet. This one is like going back. Okay, the breakout. If this is a green candle, no, gap up down. But let's see, other buyers will enter or not. Let's check this out. So so let's keep all this one running and let's see what we get at the end of the trades, and then we move on to the next indicator, which is a moving average. Moving average, the one I like to use mostly, is 20. Then EMA and this. So the one of this moving average, if you look at it here, if you want to place your trade with like 1 minute candle, 2 or 3 minutes by time using the moving average, you have to follow the same principle. Once you see the market is very close to the moving average, and the moving average is like maybe uh like something like this. Let's say the moving average is moving like this. Then these are where the candles are forming. The candles are here. And if the candle that are here is very far away from this moving average, and now it should go up to that moving average. Once you reach the moving average, you will see some weaknesses in the market at that moment. Seeing that weaknesses means that maybe the market is consolidating or you see some weak candle at that level. It means that the market is likely to continue to the upside by breaking the moving average to the upside. So in that situation, you can call for 2 or 3 minutes expiry time. So this is one, that is what I want to show you now. So the period is 20. Okay, just like this, down, and it's very close to the moving average, but we didn't see any weakness. Up, and it's very close to the moving average, then we see some weak candle. So we sell. So let's change this one also to moving average, Euro JPY. Just like what happened here. Up, very close, no weakness. Up, very close, no weak candles. Up, very close, no weak candle. But here, down, very close, but no weak candles. But if you look at it again, down, up, down, and here very close, then we start seeing some weak red and green, weak candle, small like a small candle, small green, small red. Then you can start selling the market for like 2 or 3 minutes expiry time. So let's change it. The RSI is not really good, so I don't trust that. Sorry, the CCI is not good, so I don't trust that. So let's go to the moving average. Okay, nothing, nothing, nothing. Okay, this one is very close. Down and it's very close. So if you see any weak candle here, you can buy. Sorry, you can call. You can still buy anyway because it's still like buying. If you see any weak red or green candle here, you buy. No, let's see. This will close as weak, red or green. Buy for 5 minutes. No, 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 no opportunity. Okay, this one, you say, you can see the sellers are weak. So I expect the market to go down because from here also it went up and now it's coming down. I expect the market to go down. Okay, this one touch it. I expect the market to go up if I see any weak candle. No weak candle. No small red, no small green. Okay, I expect the market to go up here. If this is a weak red or green, it will go up. This one, the market is not good here. But let's see if it is a green or red or green. It will go up. So it will go up. This one also up. Up. Not weak, no weak candle. Strong green. This one is not correct. Strong green. I expect some buyers entries. This one red, green, red pattern. Okay, like this one now. I expect buyers entry. Okay, I expect buyers entry. Green, red, red pattern. I expect buyers entry. This one count is very strong. This one is not good. Bad market. Some wrong prediction. So you see the disadvantage of using the indicator. So you train yourself not to depend on indicator. That's first thing I best say. Don't depend on indicator. Train yourself not to depend on indicator. So train yourself how to trade without using indicators. This is the reason why I left indicators, and this is the reason why I don't like using indicators. So if you are trading on support and resistance, supply and demand zones, trend line, you'll be good at that. But if it depends on indicators, you'll always be in frustration. You can see what I expect the market did not. Now let's go using the two moving average, 20 and 50 as support and resistance. This will be 50 EMA green. Okay, so with this one, this one is quite simple. You do it the way you are drawing support and resistance area. So this one should be once the price come. I think I've said that before. They'll make a video on YouTube like that. Once the price come inside these two um moving average, the market will always reverse. And make sure that the green is at the top. This one should be seller's entry. This one should be buyers, but should be inside this zone. The green should be below if you want to go with buyers. Okay, this one should go down. This one should go down as well. Green is above. Green is above the blue line, and the candle open inside the zone. I expect the sellers to enter the market. No, this one is not proper. The green should be below the 20 moving average, not above if you want to go with buyers. green above the 20 moving average. So if candle come here, we should go with sellers. Okay, this was a losing trade. Okay, this one got rejections. Then green above the 20 moving average, the market should go more down. Hmm. I expect the market to go down, then strong candle form. So the mistake I made here was to wait for the candle to close, not anticipating the market during the time. Okay, if this is a green candle, got rejection here, go with sellers because green candle is above this 20 moving average. The candle is going more down. I think it should go down as well. So now the green is above the 20, should go more down. Green above 20 should go more down. So we got rejection inside this area. So I expect to the candle, the sellers to enter the market right away. So it's a mistake. Okay. So it's still consolidating. This was a mistake. Okay, now going below the 20. So we see any rejection or candle close inside this area, we go with buyers. But same thing here. Two sellers and buyers. This is rubbish. Now I think you guys will learn something here because you can see the difference between using 1 minute candle and 1 minute expiry time. 1 minute candle and the 1 minute candle and 2, 3 minutes expiry time. You can see the difference. Okay, so you should know that the difference is clear. 1 minute. That's why I like using trading on 1 minute candle and 1 minute expiry time. So just for me to predict what will be the next candle, not what will be the next trend. Only on forex you can trade like this. If you trade like this on forex, you can win. But in binary, like this one, like this one, you expect the market to go down, but you see, after down, buyers enter very strongly. But if you know what is going to be the next candle, after this red, this green, next candle will be red. If you know that, that will be very easy for you to trade binary option. So I think this one will be 2 minutes. Let me see two more, then I will stop for today. I didn't see the candle, the line here. Okay, this one should be called. This is why I go with 2 minutes. That I expect two red candles to reach this line because once they reach this line, buyers might enter. So I expect two, but I'm seeing one red. Okay, this one like two red candle. This one the entry is bad. It might still go down. If it is forest, you can still hold the forest up down before it goes below your entry. But the binary, there's nothing you can do about it. You can't extend the time in binary option. Once you enter the trade, that's all. There's nothing like give me back my money. No seller's entry. Okay, this one should go more up. Green below the line. No seller's entry at all. see, buyer's entry is now seller's entry close below. That's why I say 1 minute candle is good to trade on 1 minute candle instead of 2 minutes, wasting your time trading 2 minutes, 3 minutes. I expect buyer's entry, seller's entry. If buyers did not reach this level, they won't stop. So I think I should stop here for today. So next time we meet again. Then another thing I will let you guys know, from next week, starting on Monday, from next week on Monday, I won't be available. So we can only have classes on Sunday. But from next week, I won't be available. I'm traveling. So I'm traveling from next week, so I won't be available. But I will be available online, WhatsApp, Facebook, Telegram. But posting of video, uploading of video, so to be till next month, because I'm traveling, I won't be available. So see you guys next week on Sunday. See you guys next week on Sunday, and have a nice day.